Hi, welcome to Finance, Business and Investing. When it comes to stocks, costs, and stagnant wages across the country, we're approaching a recession. And here's what to do if you want to make money during a downturn. It's known as the BRRT method. I made it up, but it's basically how I would make anywhere from $10,000 to $1 million if you have cash behind you during a downturn. Isn't the FA method frequently discussed? This is not the case with BRRT. This method entails you using other people's money to purchase businesses in order to increase your income. We're going to discuss it with a huge big red flag disclaimer. It is difficult to run a business. But it's not that hard. I believe the majority of you can pull it off. But, yes, it's much easier to go on Zillow Press Buy or Redfin Press Buy, fill out the mortgage paperwork, get a traditional loan structure, and hold the house and maybe put it up on a rentalunit.com for someone to rent out for you. That's really simple. However, you can't add technology, and you can't always raise prices. And you can't go from a $50,000 a year house to a $150,000 house. So there are advantages and disadvantages. Is there a higher risk in purchasing a business? I suppose. It all depends. Yes, if you do the deal incorrectly. But, because you're putting so much money down, is there more risk in real estate? I'm not sure, maybe there is. Now the BRRT method. It's essentially how you can replace your 6 and then 7-figure income and finances. I suppose you could say it's how you become financially independent. However, spoiler, I've discovered that you'll always be looking for more. I've always wondered why, everyone shares so many secrets about real estate investing, but the world of private equity investing is so closed off. To be sure, you'll lose some, but you'll make a lot more, and I believe it's more relevant today than ever. So, as I previously stated, it is known as the BRRT method. Alright. What does that stand for? It stands for businesses that have the ability to raise their prices and add technology to their offerings in recession-resistant sectors. We frequently discuss how to buy businesses on the contrary and whether you should do it on the stock market by following some of the Motley Fool's recommendations because, as you know, things are on sale. The idea is to enter acquisition mode. So here's an example of how you can profit from a deal using BRRT. You get number of these mundane businesses. When I say boring businesses, I mean companies that you use every day but don't think about landscaping, car washing, plumbing, and so on. This is the method I employ. Okay, step 1, buy but make a cash flow. You buy a cheap, profitable business that is possibly underperforming and rehab it. You ensure that the purchase price in cash flow, including legal fees, can cover the costs of repairing it. We want a tiny fixer-upper, not a nightmare case, so we use seller financing or a small business loans. So you should look into those to buy, which are similar to mortgages but are based on the value of the business rather than your assets or income. So, if you want to get a mortgage, they'll ask you, "Hey, man, how much money do you make?" I'm going to give you a loan based on the amount of money I believe you'll make in the future, aka your earnings. So it's not really a loan on the house. It's a loan based on your earnings. Sure, the house must be appraised. However, if you do not have any income and the house appraises, it doesn't matter right now because when it comes to buying a business, they look at the business as the income rather than you. That's why this is interesting. Step 2, you find your business, and now we're resisting. We want to ensure that businesses in recession-resistant sectors are protected. So you look for businesses that can withstand storms, such as consumer staples, grocery discount, retail, alcohol, mobile home parks, plumbing, and HVAC, healthcare, do-it-yourself financial services, budget travel, and basically anywhere people can save money or continue their necessary daily activities, such as my toilet being broken. I'm probably going to fix that to ensure that your area continues to grow despite the downturn. How do you do this so quickly? You can look up their previous sector returns. That is something you could do with a S&P. I like to look at ETFs in those specific sectors to see how they performed during the downturn, and then you definitely look at the performance of the actual business during that downturn, which you can do by looking at their taxes. Okay, I'll need your last 10 years of tax returns. What occurred in 2007 and 2008? What happened between 2020 and 2021? We're looking for businesses that stay flat or even grow a little bit when others fail, and it's interesting to see which products do well in a downturn. Some of these surprised me, and a lot of it is do-it-yourself stuff. When things become more expensive, people tend to stay at home more. You can make moves to the right areas while everyone else is still reeling from a market crash. Most people are unaware that their portfolios are not concentrated in recession-resistant asset classes. So, in this case, I went to a financial services company because, during recessions when everyone is concerned about money, the business I purchased focuses on financial freedom and protection. That is the type of business that thrives during economic downturns. So when people are laid off, they require new skills, which we have filled. Choose your poison here. This business is essentially an online education company that teaches people how to reskill and re-enter a new industry. Consider it like investing in a trade school or a trade university. Those often do well during downturns as well because if people can't find work, they say, well, whatever, I'll go back to school and then I'll be more marketable. Now we go to step 3. You're going to raise your prices now. You've found a business you want to buy, and you've made sure it's recession-proof. We're going to raise the price now? Most businesses now forget to raise prices in line with inflation. Some small businesses never raise their prices. Just like in real estate, you invest with the intention of raising prices for underpriced services. It's as simple as that. Typically, a double-digit increase of 10 to 30% is possible. The biggest mistake you can make here is failing to raise your prices quickly enough to deal with the inevitable inflation across sectors. You can raise incrementally, but raise. I did a very rough analysis of what it would look like if I raised the price. You can see that I'm basically turning a company from low 6 digits to mid 6 digits without selling anything new. This means I won't have to advertise, market, or grow the list. I'm just using the traffic that's already coming to me to raise the prices and give them a way to keep paying. Step 4 is to add technology to their offerings. Small businesses are notoriously not tech-savvy. This is our entire argument for creating a venture capital fund to invest in technology that will support the future of small businesses. This astounded me. Do you realize how technologically advanced these companies are? 36% of them do not have a website, and 89% of them use fax machines in some capacity. 40% of these businesses do not have a social media strategy, and the majority of these businesses ignore the two most important things in my opinion, which are reviews and Google searches. That is what we do. We add technology to the business, and now you can take a business that is doing okay or that is doing $100,000 in revenue, like I did, and buy it for something like $62,000, and then turn it into a business that does $350,000 in the same year. What I've done is taken my $62,000 purchase price and found a way to pay it back entirely to myself within the first year because I won't have $50,000 in profits to work with. I'll have between $150,000 in profits to work with. This is the point at which people begin to question why you would sell your company, and you must realize something. There are more baby boomers retiring now than ever before. More people than ever before are transitioning from one career, which includes working for yourself, to another. People want to see a change. People desire to retire. COVID was difficult for many of these business owners. Have you ever attempted to teach your mother or father about technology? Assume that the person from whom I purchased this business is 68 years old. Since the 1980s, this company has been selling financial products and models. So it was just chugging along, making him some money on the side while he worked as a financial advisor. He lacks the foresight to go out and add to it, such as the automated tools I frequently mention. Bench, for example, will do all of his bookkeeping for free. So, whatever you do, look for a boomer who wants to sell a business that you can buy, one that is in a recession-resistant asset class where you can raise prices and add technology. Forget about the BRRRR method. The BRRRR method yields the best results. Especially since, in case you didn't know, the average single-family home earns $462. You can look up my math there on the internet. Profit of $462 per month. My company will earn between $100,000 and $50,000 per year. We're talking a huge difference here, and I only have to put down $62,000. How much would you have to put down to purchase a piece of real estate that generated $150,000 in profit in a year? We're talking about millions of dollars here. Not in the tens of thousands of dollars.